Hey, what's going on, everybody? It's Riley here again. Today's Tuesday, December 28th. I'm going to go over my trades from today. I got a couple good lessons from today, a little bit of discussion about risk management as well as risk to reward, which is, I mean, pretty much the same thing, but I'll show you, excuse me, I'll show you guys how I took a trade with skewed risk to reward, and where I should have entered the trade instead whenever I had the confirmations. Or maybe, sometimes you're just not meant to take a trade. You may have a good entry, but the risk to reward just isn't there. And that might have been the case today. So had a very small green day today. Nothing wrong with that. I made $16 or 1% of my account. Really just trying to stay alive and manage risk until price moves in my favor, and then I'll start making bigger gains. Really just focusing on building up confidence right now so that eventually I can scale up. But I'll go ahead and start off bigger picture context. My charts are a mess. I do apologize. We were at all-time highs. I don't know why the hell I charted all this morning. I'm going to start just charting like the average day range. There's really no need for me to chart all of that. But we were pretty balanced today. But anyway, ES was at all-time highs and actually made an all-time high, made a new all-time high in pre-market. So ES was definitely relatively stronger than NQ. It's saying high here because I only have it on 20-day, but we are not yet at all-time highs. You can see this purple line here at the top, 16767.5 is all-time highs. So ES is relatively stronger, bigger picture. I'll go ahead and zoom down zoom into the 1 minute. And show you guys what I was looking at pre-market. So we actually came up and tested, we're inside daily supply here, and we tested some of these all-time high supply zones that were all fresh. We tested one in pre-market, or actually two of them, I believe. But anyway, tested them and started kind of selling off, coming back down to the stacked demand that we had created. But I saw this downward trend line, not really a bull flag, it wasn't really looking too clean to me. See what I'm saying? If it was a bull flag, I would have wanted to see like that. Anyway, so I marked that trend line at the open, and opening and supply, generally, I do not want to play calls. I want to wait for it to come into demand and get a reaction. But over here on ES, the relatively stronger future, we were creating a bull flag inside of demand right before the open. So that was looking really good to me. I was looking for ES to break this bull flag to the upside and have confluence from NQ. And if we were strong over here, I was confident that we could push up, and create a new all-time high. I was targeting 4,800, on one of my trades I was. But, we didn't end up making it there. And there was a lot of... It's becoming so much easier for me to see the psychological traps that market makers use to stop people out, especially on days with lower volume. I mean, we don't have crazy low volume today, but it isn't the highest either. So I'm actually going to auto-arrange these. But anyway, getting down to the trade. So let me zoom in over here. So whenever we opened on NQ, we immediately created supply and just kind of sold off invalidating this trend line, or not invalidating, but breaking below it. Then we retested and actually twice retested. We were at yesterday's high of day and a prior close here, as well as a fresh 4-hour demand. So I was looking ideally for a bigger reaction than that. And, if we would have had a good reaction here and immediately bounced, that would have fueled a breakout of this bull flag to the upside. Excuse me, I'm going to get a drink of water again. But that didn't happen. So we just kept selling off, and I was just staying patient. But eventually we broke below pre-market low. I didn't want to short, even though we had all this range down to this daily key level, like very key level that was at my video yesterday. Even though, if we didn't have this stacked demand here, as well as we also had all this demand, fresh demand down here, it wasn't likely to happen. So I was still bullish. I wasn't ready to go ahead and buy puts as soon as we crossed below pre-market lows and closed below. And sure enough, we bounced, found buyers down there, and same deal over here. We broke out of this bull flag to the downside, but then found buyers at prior close in yesterday's high of day, inside this 30 and 15 minute fresh demand, or not really so fresh anymore, but nevertheless closed above. So that's bullish. And then we actually ended up rallying all the way up, and I entered as soon as we broke above. You can see we had a nice volume increase down here. A lot of buyers factored in. And then we had this big push up, and I entered as soon as we broke above. And so, valid entry. I had confluence from NQ. We were bouncing out of demand. I was anticipating us to break above this supply zone here. And that also, or break above that supply zone and above this trend line, and that would have fueled the move upward. Of course, we did not get that. We also had this little intraday supply here, just a little bit of a pullback on this downtrend that I was looking for ES to get above, and we actually rejected that. Ended up coming back down below the trend line, back into demand, but we had this nice lower wick, so I wasn't too worried. And I actually had my stop loss at VWAP here. So this is where the discussion of risk to reward and stop losses comes into play. So, I was targeting pre-market high, and I entered all the way up here. Well, we found all these buyers and created demand down here at these key levels. We had a close above the bottom trend line of the bull flag, and we had buyers down at this prior close and yesterday high of day. So a lot of buyers factored in here. This would have been a good valid stop loss here at low of day. And let's just say, ideally, I should have entered this trade as soon as we found buyers. I know it's not highest probability because this kind of just reversed, but we were bouncing at pre-market low, had a nice volume increase whenever we came below pre-market lows, had a nice volume increase over here. I could have put risk on the table once we had this nice basing candle and close above these levels. And, that maybe isn't the highest confidence trade, but the confirmations are there. And then we would have had this push up, and stop loss at low of day. I would have, never hit it and rode it all the way up to my target, which was pre-market highs. But since I had an illogical stop loss, VWAP, you should never use an indicator with my rules, I should never use an indicator as a stop loss. This is the first time I've ever done that. So that just kind of shows you that I did not have a fully structured plan. And I've said multiple times now that I need to use chart structure, like lows or highs or demand and supply zones as my stop losses, because they are valid points to see if those buyers or sellers are still present. Um, so, just totally like skewed my risk to reward entering all the way up here. Had there been a nice basing candle here, I could have entered anticipating an RBR and then set my stop at the bottom of the basing candle, because that would like invalidate the demand zone if we came below. But I just entered on a break of this trend line, and didn't really have a valid stop loss. My only valid stop loss would have been low of day. And look at the risk to reward here. So, is this not working? So to low of day, you can see that's 7.63 points on ES. And then to my target, it's 7.39 points, roughly. So it's like a 1-to-1 risk to reward. Not good if you're a trader. You want ideally like 3-to-1 plus. I guess that's reward to risk ratio. But this just was totally skewed. I could have put my risk down here. This just overall was not the best entry. If I wanted to take this trade, I should have entered down here, but I wanted the additional confirmation of this break of this trend line. I could have entered on this higher low here once I saw us come back above VWAP, but this risk to reward was totally skewed. You can see if I entered as soon as this candle closed, which is what I normally do, I wait for a basing candle to close and then I enter. To low of day, it's roughly 2. And then up to my target, it's 13. So that's a 6-to-1 or 1-to-6 risk to reward ratio. So that's fantastic. And it's a very valid stop loss. But this, we wouldn't have seen it being a super valid stop loss immediately because we didn't know we were going to form demand. But still, we have low day here. And we have all these major areas that buyers are defending. So basically, I entered this trade with a skewed risk to reward, sold basically a panic sell because it was an illogical stop loss. And this trade would have worked out perfectly, but I guess I was just chasing it, So unfortunate, but another good lesson, of course. Sorry if I'm just talking on and on. I want to check how long this is. Already 12 minutes. Cool. So my second trade, 9:53 to 10:01. So I basically saw that we put in a higher low here. Oh, I didn't even talk about NQ over here. So on the last trade, I sold out once we came below VWAP just because it triggered my stop loss. But we also formed this ascending wedge here and broke to the downside. So that's an additional bearish signal, to like get out of the trade. But I'm starting to do less of scalping and more of like, I want to get the entire trend, I always get in at points like this and then get stopped out because we're literally just following the trend and it's not fitting my plan, if that makes sense. So anyway, yeah, I had multiple bearish confirmations, and with my skewed risk to reward, I was easily shaken out of this trade. Second one, I waited for buyers to bid us back above this little supply here, and also to get us above prior high of day on ES. And then I entered calls again right here, targeting still pre-market highs. And I set my stop at the base of this candle. Not really a valid, stop, but I just wanted to, I basically was watching for a retest of this area, because if we would have rejected here, it would have been a triple top and I needed to get out anyway. We might have came back down and retested here, but I just wanted to see this work out quickly. And then, so as soon as we got above, I entered. And then over here, kind of the same deal. We came back up, got above this area where we were rejecting prior. And then we came up to this downwards trend line from pre-market. and formed an RBR and broke through it beautifully. So that was additional confluence. But then we kind of started hesitating. Volume died out as we were approaching pre-market highs. I did manage to move my stop loss up once we made it up here, because there's no we were overextended, and there was really no reason for me to leave my stop all the way down here. Not valid stop loss anyway. So I moved it up to this little demand zone that formed. You can see we rallied through this pre-market resistance. So I moved my stop loss up to the base of that candle. And then once we made it up to pre-market highs and all-time high, we pushed up 47.98, and I was looking for this nice psychological whole number 4,800 to take profit, but it didn't end up working out. We rejected. We also got some selling volume over here and started pulling back. We managed to stay above this trend line over here, but or we closed above on this candle, but then the next candle we totally dumped, and I sold as soon as we broke below this demand zone, because that showed that buyers were no longer present. So I think that this trade was, very good. Well, not very good, but it was a successful trade, and I managed risk well. I moved up my stop loss to a valid, zone or supplies. Sorry, a valid demand zone. So I had an actual place to judge if buyers were still present, and since they weren't, I stopped out. Even though they ended up buying us back up and we closed above, I managed my risk well instead of just waiting for it to come down here and panic selling. I don't think if I was even playing multiple contracts here, I probably would have gotten out 100% of my position, because we rejected such a key level, all-time high break. Once again, I'm not very confident. So we rejected and sold off hard. I would have stopped out here anyway. But that brings me to my third trade, which was literally a re-entry as soon as this candle closed. Buyers bought us all the way back up and inside of this demand zone. And then over here as well, buyers bought us all the way back up after retesting these key levels. Yesterday, high of day and prior close, as well as 4-hour demand. Bought us back up, and we closed above that downwards trend line from pre-market. So I was really liking the looks of that, especially the volume increase, pretty significant. Buyers were being rewarded, so I went ahead and put risk back on the table. And we had this nice DBR form. So, I was very happy with that. And then volume died out as soon as we made it up to the key level once again. And I was not liking the looks of that. Especially we rejected. It had this nice long upper wick. You do not want to see that with the basing candle. If anything, you want to see the basing like up here, and you can anticipate an RBR. And I also would have liked to see no upper wick on this candle to show strength. And then, additionally, NQ was looking weak as well. It's pretty obvious. You're expecting a DBR, especially after buyers show all this effort. They're just not being rewarded here. Sellers brought us back down, and we had this shooting star here. So that also made me lose some bullish confidence. I really wasn't expecting us to break out of this to the upside, especially at this key level. We needed volume, and there was just no follow through. So as soon as this candle closed, I went ahead and sold my contract for a 5-cent gain. I know it didn't trigger my stop loss or anything, which at this point for this trade, my stop loss was now this low, which is valid. But we're up at all-time highs. Contract prices or premiums are inflated, and I didn't want to take a big hit, especially if we break this flag pattern to the downside like we did right here. Volume was dying out, and we're just kind of hanging out here with a bunch of upper wicks. I don't want to see that. So, yeah, took risk off the table and secured small profit. So, fairly happy with the day of trading today. Could have been better, but also could have been worse. I just think today was a very balanced day with a lot of chop. So I played it as well as I could. I put risk on the table, and as soon as I saw that it wasn't working out, I took that risk right back off the table, and even secured a little bit of profit. But the main lesson from today is risk to reward and stop losses. If I would have entered here when I got this confirmation, and huge increase in volume, and buyers present at these levels, and confluence over here, excuse me, big volume increase. Well, not the greatest candle here, but once I got this confirmation, this push, I could have entered like right here. As soon as we pushed back above pre-market lows on NQ, I could have entered SPY calls, because we're bouncing at a very key level, here on, or not super key, but chart pattern and these two key levels. So I could have put risk on the table here and maybe gotten like a 4-to-1 risk to reward up to my target, instead of buying at the break, after we have a decrease in volume. Where'd it go? Yeah, you can see volume decreased here. Just really not the highest quality thing or setup. And, skewed my risk to reward, and I got shaken out, and I paid for being impatient, So sorry if it seems like I'm just, talking on and on, but this has really been helping me journaling and doing these trade recaps. I hope you guys are enjoying too. If anyone actually watches these, thank you very much. I appreciate you guys. Feel free to leave any criticism or feedback in the comments. I do read everything. And yeah, other than that, good luck trading tomorrow, and I hope you guys enjoy the rest of your night. Peace.